स्टूडेंट्स, नमस्ते। कैसे हैं आप लोग? माय नेम इज दीपक गंगवा, स्टूडेंट ऑफ सेंट ज्योति विद्यापीठ वुमेन्स यूनिवर्सिटी। In today's session, we'll see more definition of income tax. Okay, so what these definitions we have already seen. Now we'll see more definition of income tax. Now, double role of financial year. When income of previous year not taxable in the immediately following assessment year. So, as a rule, income of previous year is taxable as the income of immediately following assessment year. तो अगर हम बात करें तो this is not much important. Now we'll see person. Who is person? An individual. Person includes an individual, a Hindu undivided family, a company, a firm, an association of persons, a local authority, or any artificial jurisdiction person not falling within any of the preceding categories. So these are 7 categories of persons chargeable to under the tax under the Act. The aforesaid definition is inclusive and not exhaustive. Therefore, any person not falling in the above mentioned 7 categories may still fail within the 4 concerns of the term person and accordingly may be liable to tax. Now, a brief description of these category as follows. Individuals are all living persons of blood and flesh like Ram, Sham, Gopal, etc. Hindu joint families are regarded as separate tax entities in view of the specific law of succession prevalent among the Hindus. Company is defined in Section 231 and includes Indian as well as foreign companies and public, as well as private companies. Besides, the CVDT has the power to declare an institution as a company. Section 25 companies are also included under the preview but have separate exemption under the Act. Partnership firms are regarded as distinctive taxable units under the Income Tax Act. While the partners will taxed as individuals, the firm will be assessed separately as a firm. Now, Bank of India and Association of Persons are the group of persons carrying on some activities to earn income, such as joint venture. Normally, associations of persons may be contractual, such as joint venture agreement, if it is not a firm name or as a company. BOI sometimes made due to circumstances such as joint ownership of an estate, club, society, etc. Also covered under this head. So now see SSC. SSC means a person by whom income tax or any other sum of money is payable under the Act and includes every person who are preceding under the Act, a person who is accessible in respect of income or loss of other person, and SSC in default under the provision of this Act. An assessment is the procedure to determine the taxable income of an SSC and the taxable payable by him of the Income Tax Act 1961. Now, income tax is the tax on income. Income tax is the tax on income. Still, Income Tax Act does not provide any exhaustive definition of the income. So now we'll see income includes profit gains, dividend, voluntary contribution, receipts by employees. So these things, income from business, some receipt from non-corporate agreements, balancing charges, any capital gains, any some earlier allowed. So these are the examples of income. Now, gross total income. Section 14, the Act defines the gross total income as per the aggregate of the incomes computed under the 5 heads: income from salaries, income from house property, profit and gain, capital gain, and income from other sources. Total income of an asset computed by deducting from the gross total income all permissible deductions available under the Chapter 6A of Income Tax Act 1961. Scheme of charging income tax. Income tax is SSC particular assessment year. This implies that income tax is the annual tax on income. Income of previous year is chargeable to tax in the next following assessment year at the tax rates applicable for the assessment year. This rule is, however, subject to some exception discussed in paragraph 4 above. Tax rates are fixed by the Annual Finance Act. Okay, tax is charged on every person. If the gross total income, the minimum is exceeds the minimum chargeable to tax, and taxes levied on total income of every SSD computed in accordance with the provisions of the Act. Income tax rate for assessment year: 5 lakh for super senior citizen, 2 lakh 50,000 for senior citizen, 1 lakh 94,000 for women, and 1 lakh 80,000 for individuals. So this we have summarized all these things. So I hope you have understood the session. If you like the session, then please write in comment box. If you have any doubt or query, then you can ask. You can ask me in comment box, and can ask or can clarify your doubt in live session also. Thank you very much.